Let's welcome on board Amnish Aggarwal, the head of research at Prabhudas Lilladher as well. Amnish, I just wanted to begin by asking you about ITC. I'm not sure if you heard the conversation or snippets of conversation that Nikunj had, but they're talking about how FMCG is going to be a big lever going forward.
Yeah, good morning. So, you see, I agree with that view because if you look at, say, past few years also, whether it has been a situation of slowdown or not, ITC's FMCG business has been growing in good double digits. And given the fact that some of the businesses have scale and ITC has been consistently entering the new lines of businesses, I think ITC's your FMCG business has got a long road ahead for growth.
ITC, but let's get a move on and put the spotlight on stocks on the editor's radar today, and we'll be discussing ICICI Securities and Natco Pharma. Let's begin by talking about ICICI Securities, and of course this is a stock in news. The board is going to meet at on the 29th of this month to consider a delisting, and interesting given that ICICI Bank, the parent company, has about a 75% stake, and given its performance since its IPO, Nikunj.
This is a bit of a surprise because normally when stock prices are down, companies, they consider a buyback. They don't consider a delisting. ICICI Securities went public largely because at that point in time, which is 5 years ago, ICICI Bank needed capital. But I think the reverse is at play, which is that they don't need capital. They've recently got approvals to increase their stake in ICICI Lombard, the general insurance business, and now they are looking at, they are proposing that they want to go ahead with the delisting of ICICI Securities. ICICI Securities as a stock has done precious little ever since it went public. Even though we've seen, even though we've seen a huge change in the way how the number of demat accounts and what's happening to the mutual fund industry, ICICI Securities in a sense has not really been a grand market performer. In last 5 years from the IPO price, the returns really have been flat for ICICI Securities. One. Second, what would be interesting here is that when the stock is at a relatively all-time low or it's been flat and has given precious little performance, will their delisting offer be successful? And if they have to really delist when the stock has done nothing in the last 5 years, the question which needs to be asked is that will they come at a premium? If they will come at a very smart premium, I would say that it makes sense to tender the stock because this space is getting extremely competitive. But if the proposed price is not at a lucrative premium, then it makes sense to really hold on to that stock per se.
Okay, that's the view coming in on ICICI Securities. This is certainly going to be a newsmaker. Natco Pharma then, and the performance has been anything but, given the fact that the company has said that there's been an improved base for their business outlook, and off late, what a tear.
The stock went through a massive amount of re-rating, Avan, and that's largely because of what happened to the pharma space and the kind of product COVID portfolio Natco Pharma had. Then came the realization that what drugs they had to offer, that in a sense were not really having effect on that entire COVID cycle per se. Thankfully, COVID came down and they had to do a lot of inventory loss. But now markets are recognizing that there's strength in the balance sheet, there is cash in the balance sheet. Some of the product portfolios which they represent right now, they in a sense are also recovering from this price slump per se. Natco has an history that they are an innovator company. Every 2-3 years, they've been able to find one drug where in a sense could be called as a wonder drug for them. So that entire COVID re-rating became derating, and now business is normalizing. And when things are normalizing, looking at the balance sheet, looking at the fact that they are an R&D focused company, nobody owns it, nobody likes it, it makes sense to perhaps be a contra buyer in some of these niche companies, especially which are from the pharma space.
A contra buyer in Natco Pharma. There you have it, Anisha. Stocks on the editor's radar.
In fact, let me take it up from there. What's your view, Amnish, about Natco Pharma and the other underdogs per se from the pharma space?
You see, as we don't have coverage on Natco Pharma, but pharma space, I would say we are cautious at the present moment because the sector has not given consistent returns in the past. Within the sector, I think your Sun Pharma in the large caps and Torrent Pharma and JB Chemicals in the mid caps are the stocks which you like.
Okay, so those are some select strategies coming for you from the pharma space. But Naresh, what's your view as far as the entire real estate pack is concerned? Godrej Properties was in news over the weekend because they've acquired some more land, and then the rest of the real estate names were at least in an uptrend till a week or two ago.
So the uptrend is still intact. We've just seen some bit of a pause in these names after the sharp move. So the structure is still positive. DLF looks the most interesting one because the stock has come out of a multi-year breakout. Say the stock broke out of 400 to 430 levels, went up to 500 plus, and now it has faded off over the last 1 week towards 470, 480 mark. I would expect it to hold the 460, 440 mark. A dip closer to that zones would be a buying opportunity, wherein again the next time it goes above 500 and even higher, that is the view. So DLF is the first one. Second is looking at Prestige, which has given a breakout and is holding on. So these are the names, and say even a Brigade looks interesting. So DLF would be the top pick on dips in the real estate sector, and overall the sector has the move it has made in April, May, June is generally an indication of a longer term uptrend starting possibly across the sector. So you want to be buying into this dip.
Okay, buy into the dips when it comes to the real estate sector. But Kunal, your take on a couple of these other news-based companies today. Apollo Tyres, of course, on account of that analyst meet that they had, the company reiterating their FY26 outlooks, but saying that in the near term, it's volatility which is going to be the name of the game for FY25 and FY24. The other one I want to talk about is Landmark Cars. I'm not sure if you have enough history on that one, but that stock too saw quite a bit of buying from marquee names.
Well, Apollo Tyres is interesting. I'll start off with that, Nisha, because it's been a classical stock. I was looking at the charts for Apollo Tyres. I think last quarter results when the stock was almost at 360, 370 levels. And from there, it just moved on from strength to strength. The stock has scaled past about the long-term averages. In fact, the last time, I remember that the stock had actually fallen below the 200 DMA, was almost like a year back for the stock, and that itself tells you the kind of strength the built up the stock has seen over the last 1.5 odd year in terms of price recovery. So I think even at 410, 415 levels, if there is a marginal correction for Apollo Tyres, I would still believe that that's a good dip to buy into. For Landmark Cars, I would wait out for a confirmation, because even after Friday's strong up move, the stock somehow is taking resistance at the 725, 730 odd mark. So there were two previous attempts towards the breakout 725, 730 mark, but the stock failed to break out of those levels. We are currently at 717 mark, which means possibly another 15 rupees higher is where the test would come out of a resistance for Landmark Car. So I would wait out for a confirmation about 730 levels, and if the stock actually closes above those points, we can start to expect that this consolidation is over for Landmark Cars and the stock could start to get trending.
Okay, so Apollo Tyres and Landmark Cars, that was a discussion on these two counters. But let's get your fundamental opinion now. This one is coming in from Dipan Mehta and why he likes Praj Industries.
We like this entire capital goods space, and two companies which come to mind which are quality players over there. One is Praj Industries, which of course is pursuing the ethanol opportunity, and second is VA Tech Webac, that's been also moving up, scaling to new highs. We all know the importance of water. I think it is front and central with every agency, state, central, as well as private sector. And VA Tech Webac is a quality player in water projects. They have an international footprint as well. Both the valuations, I think, compared to the business dynamics are reasonable, and they are sitting on multi-year order book positions, which we like. So I think there's good earnings visibility as well. But again, I think, these stocks have run up. One must, be a bit careful and do their own due diligence before investing in them.
Okay, let's discuss some more stocks with our guests on the show. Insurance is one space which is seeing a bit of a bounce back. Of course, HDFC Life has been leading that rally. But Amnish, your take as far as the entire insurance space is concerned, and if yes, what are the top bets?
Obviously, insurance is, I would say, one of the most interesting segments if you look at in the long term. And if you look at the stocks in particular, I think over the last 2 to 3 years, the insurance stocks have actually underperformed, whether it is life insurance or whether it is general insurance companies. So as far as I think if you look at in the long term, I think both life as well as general insurance companies, they hold a lot of scope for a consistent and steady returns. Now, looking at particularly life insurance space, I think among the listed inverts, HDFC Life continues to look good. Maybe today there is some news action due to which it can correct a little bit, and followed by SBI Life. As far as your non-life is concerned, I think we have got two prominent stocks. One is your ICICI Lombard, and another is Star Health. I think given the incidence of, you can say, the mediclaims, which is, you can say, less in India, and now this entire segment is catching up. I think in the long term, investors have got a lot of, you can say, scope to make high returns from both the segments, that is both life as well as non-life insurance. However, I think one will have to take a long-term view because the insurance companies per se, they are not very cheap in India.
Nuresh, has ICICI Bank topped out and has HDFC Bank bottomed out? They both are moving quite opposite now.
I don't think so. It has topped out. It's actually taking a pause. Say, ideally in a top out case, it should have fallen much more sharply. So it was making a range of 930 to 960. It broke below 930, and as the stock has gone nowhere for the last 4 or 5 days. So struggling around the tops rather than topping out. So waiting for the time whenever it crosses 940 would be a trigger that the trend has changed. HDFC Bank, on the other hand, has actually made a good move over the last 3-4 sessions. Holding on to that 1550, 1580 support zones and bouncing back. But the big struggle lies at that 1700, 1730 mark, which was the top when the merger got announced, and over the last 1 year as well. So HDFC Bank has finally shown some bit of a relative outperformance in the last 3 sessions, but too early to say whether it can cross 1700, 1730.
Kunal, that same question. Has ICICI Bank topped out, HDFC Bank bottomed out?
Well, HDFC Bank seems to have bottomed out, but I'm not sure whether ICICI Bank has topped out or not. Nikunj, I think in this month, or rather in this series, is where ICICI Bank has underperformed most of the other peers, immediate peers, or even the smaller peers in terms of market cap. But I believe that when a large cap names gets into a 30, 40, 50 point correction or a time-wise correction, it's actually considered to be that possibly the stock is getting ready for a bigger up move whenever that breakout happens for the stock price, because where the sector does exceptionally well, large cap stocks take a bit of a time-wise correction. It's either on the back of some expected news flow or maybe some sort of a churn which is playing out within the sector. But once that part plays out is where we expect the stock to break out. So we'll have to be patient enough to wait out for ICICI Bank coming back about the 950, 955 mark, and that could be a strong breakout point for ICICI Bank. But yes, HDFC Bank seems to have definitely formed a short-term bottom, and I would not be surprised that the stock actually scales past about the new highs of 1725, I think 1725, 30 levels for HDFC Bank.
Amnish, what's your view on this entire defense space? And when I say defense space, I'll be specific here. Let's say BEL and HAL. These are companies which in a sense are going to be the biggest beneficiary of what is happening in the defense/aviation space.
Obviously, we like the defense space because India has underinvested in defense, maybe not last 5-7 years, maybe for at least the past couple of decades. So defense offers a very good opportunity given the kind of, you can say, long borders we have, given the fact that we are, you can say, some of our neighbors, I think they are large countries with very strong, you can say, defense equipment in their hands. So I think both the stocks, if you ask me, they are good, particularly if you look at, say, Bharat Electronics. Bharat Electronics offers you an opportunity to play you can say, the broad-based growth, because it caters to Air Force, it caters to Army, it caters to Navy, and the kind of electronic warfare equipment that Bharat Electronics makes, I think these are all futuristic products. And as we go along, I think the demand for these products is only going to increase from here. However, if you look at the entire defense pack, the P multiples of Bharat Electronics, I think they are perhaps the highest because the stock got listed maybe say 25, 30 years back. It is a seasoned stock. It has given returns to the, you can say, investors in the past. And so now it's quite, I would say, mature, and there is no big element of surprise which is going to come in terms of PE rating or something. When it comes to Hindustan Aeronautics, I think another very good company. However, if you look at past 5 to 7 years, the growth has not been much because in some of these, you can say companies which are into aircrafts, which are into say your submarines or frigate, the business usually tends to be lumpy. That is one. The second is here the capacity limitations also, you can say, play a big role. Now, what has happened with HAL, particularly in the last couple of years in particular, that the stock which was trading at say less than say maybe say 9, 10 kind of P multiple. So the P multiples have got massively derated and the stock will maybe say 4, 5x from the bottom. Now, incrementally from here on, I think the P multiple expansion will come at a slower pace. But having said that, the recent, you can say, visit our PM to US and the fact that these guys will now get your GE engines for the new Tejas aircraft, so that is definitely positive for this company. However, one thing is re-rating and one is your secular growth. Given the fact that the business which say an HAL is having or maybe some of the other defense stocks, so they are usually lumpy. I think the P multiple re-rating might happen, might stop after a while, and then post that we will have very secular returns. But having said that, in the medium to long term, the stock looks good till the time the thrust of the government on the, you can say, upgradation of the defense forces, equipment, other thing remains at the center of activity.
Got some more details, and we were wondering in the morning that why ICICI Bank is looking at delisting their subsidiary of ISEC. Now, ISEC as a stock, frankly, in last 5 years, given that how competitive the landscape has become, what is happening to the entire brokerage space per se, commission structure, Zerodha has created a zero moment there. ICICI Securities or ISEC has not really been a massive wealth creator. From the IPO price versus the volatility in the stock versus where it is, it may be up from the 52-week low, but frankly, it's been a heck of a volatile stock. Now, when ICICI Bank decided to take ISEC public, that time they were in need of capital. They needed a lot of tier 1 capital. The stock price of ICICI Bank after that Chanda Kochar issue was trading at a multi-year low. And it made sense for them to perhaps raise capital via diluting the stake in ICICI Bank. So they decided to list ICICI Securities, a cash-making subsidiary. But now they're looking at reverse. And what we've learned, this is an ETNM exclusive, that on 29th of June, rather than an absolute delisting, it really could be a share swap. In this case, what we understand, again source-based, the current investors or shareholders of ICICI Securities may get shares of ICICI Bank. And my colleague Ankur Mishra has got some details. And Ankur, first let's understand that why are they looking at delisting it, and if they're looking at delisting it, why are they looking at a share swap?
Yes, in general terms, when a delisting happens, the expectation of shareholder is that they are going to get cash. But this time, if we see details of the delisting notification which has been received on exchanges, it says that Rule 37 of Securities and Exchange Board of India delisting norms, which clearly means that the approval which the bank has got is for swapping of shares, meaning the shareholders will get shares of ICICI Bank, and the announcement of details will happen on 29th when the actual board meeting is happening, and how many shares of ICICI Bank will get the shareholders of ICICI Securities will get. But for now, one thing is clear, that shareholders are not getting the cash in lieu of the shares which they are holding right now.
All right, Ankur, thanks a lot for that. Again, this is completely source-based story. Would you understand that they are looking at delisting? In the delisting, the existing shareholders of ICICI Securities will get additional shares of ICICI Bank. That's a share swap. 75% of the company is currently held by ICICI Bank already. Amish, let's discuss this news. ICICI Securities, when it went public, it in a sense, was the first of the big subsidiaries of ICICI Bank. That time they needed cash, they needed tier 1 capital, but now it's the other way around.
Yeah, Nikunj, if you look at last 5 years, the industry has changed a lot. It's not only the question of ICICI Bank, you can say, not having the capital requirements now, but it is also to do with the state of the industry. As you also said rightly, that the industry has become highly competitive. And ICICI Securities, for example, if you look at the various, you can say, segments of this company, they are into iBanking, they are into institutional business, they are into retail, and they are into, you can say, primary dealership. Now, particularly if you look at retail, it has become highly competitive, so is the institutional segment, and the investment banking, I believe, has been doing good when the IPO rush has been there in the last 2 to 3 years. So having said that, I think with 75% stake with the parent company, and actually ICICI Bank is not at a loss at all, because the current price is not very different from the IPO price. So now if any share swap ratio happens, I think the ICICI Bank has nothing to lose. They will only gain. And for ICICI Securities shareholders also, they are getting a share of pie in a much more, I would say, secular business, because broking and all these activities which ICICI Securities is doing, they are highly volatile, because in a good year, your profitability growth will be very high. But then during the lean years, you might be at the receiving end, and at the same time, the entire dynamics of the industry are changing. So I think it's a very interesting move, and it is actually contrary to what has been the trend over the past many years, whereas whereby you can say many banks, or you can say companies of that sort which are having the broking arms, they have been trying to list. So I think it also shows the kind of pressure which the industry is currently going through.
So where do you see ICICI Securities stock moving?
It's very difficult to say, because if it would have been a simple plain delisting exercise, then usually the expectation is that the shareholders will end up getting, say, maybe 30-40% premium. Okay, so they will get cash in their hand, and so in anticipation of that also, that there is a renewed activity in the stock in the markets. But if it is something like a share swap, I don't think it is going to have significant impact on the stock price, because it imbibes some sort of an uncertainty, and everything depends upon what is going to be the share swap ratio. If the share swap ratio is favorable for the ICICI Securities shareholders, then the stock might make I would say, a bit of move from here on. But I would keep my fingers crossed and see what sort of a swap ratio is announced finally by the company.
Amnish, what's the outlook when it comes to the entire auto space, given the fact that we are seeing that domestic two-wheeler recovery? Also, when it comes to something like Bajaj Auto, the Bajaj Triumph is a fairly interesting and important catalyst for the company. How do you see the players within the two-wheeler space in specific?
The two-wheelers have been a bit on the receiving end in the last couple of years, and one of the major reasons has been the slowdown in the rural demand. The numbers in, I think, particularly the month of May, they have been pretty good for the two-wheelers or bikes in particular, because it shows some sort of uptick happening in the rural demand per se. So I would say the two-wheelers, they have some steam, because from the low base there, the demand can go up, and it is one segment where today the volumes are still significantly lower than what it used to be, say, 2 to 3 years back. So that gives some sort of, you can say, headroom for growth for these companies. But having said that, two-wheelers is one space where the impact of EV is also the highest. So that is why I think we have been, I would say, cautiously optimistic on two-wheelers, because it is going to be a very competitive space. Now, whether it is Bajaj, whether it is, I think, Hero, they are all entering the, you can say, 350cc above segments, and I think that is one segment which has been growing very well over the past couple of years in terms of even slowdown. But the mass segment is one, you can say, the bike between 100 to 150cc, where the maximum amount of pressure is there. Now, if the rural demand revives, I think in the next 2 to 3 quarters one can see good growth to come for the two-wheeler companies. But having said that, I think given the state of monsoon so far, which has been, I think, below normal so far, one will have to wait and watch how the, you can say, the monsoon plays out, what is the impact of El Nino and all. But definitely, having said that, if there is no jitters given by monsoon and all, then all the two-wheeler companies have got decent scope.
Let's look at ICICI stock. It should be up. Needless to say, it should be up. If you are a shareholder of ICICI Securities, suddenly you may get shares of ICICI Bank. That's what we understand. Completely source-based information. Locked up 20%. Thank you very much. 675. public, not that ICICI Securities needs a lot of cash. It went public when ICICI Bank needed a lot of capital because of the write-downs they had to do, largely because of the economic downturn and after that Chanda Kochar episode. Now what we understand is that on 29th there could be a share swap. But meanwhile the market reaction I think is immediate. Let's look at ICICI Bank, which owns 75% in ICICI Securities, and where that stock is, I don't think it's going to move the needle significantly for ICICI Bank per se, because for ICICI Bank it's about the banking business and it's what's happening to their banking book rather than the subsidiaries. Because for a bank, if you're diluting, it may not really hurt them a lot. But for ICICI Securities, if you're a shareholder there, well, this is like a golden ticket that you're getting an out of jail card to get out of a business where the competitive landscape has only increased. And let's look at some other brokerage stocks. I mean, the only one which I can think immediately would be Angel or even Angel, which is into discount broking. Motilal Oswal Securities, which is into AMC insurance as well as brokerage. So Angel 1, it's not going to change today, but in last 1 year, Angel 1 has come down. In last 1 year, the stock price of Motilal Oswal Securities has suffered. So this space in a sense is getting very, very competitive, something what we've discussed. From the 52-week low it may change, but otherwise in general from last 1 year per se, Motilal Oswal is down. Angel went through this gut-wrenching fall and now seems to be stabilizing. Amnish, so leave us with your best stock idea. Where do you think in next 24 to next 36 months, 30-40% upside possibly could happen? And I'll keep the market cap criteria open. Mid cap, large cap, small cap, you could choose.
Okay, if you're asking me, say, for the next couple of years, kind of, I think, horizon, one space we have been very optimistic about is capital goods. And I think among the frontline capital goods companies, I think the twin pack of ABB and Siemens, I think both the companies they are doing quite well. So they are in the center of whether it is, you can say, energy transition, digitizations, data centers. So this entire space looks very interesting, but particularly I think over the next couple of years, Siemens and ABB, both these stocks looks very interesting to us.
Outlook, I mean, we were discussing as well earlier on the show how there are some select stocks as well that have come off from the highs. But what's your outlook in terms of Paytm, Zomato, new age tech companies and the investment rationale here?
Yes, it's for me.
Yes, Amnish, your outlook on new age tech?
Okay. So if you look at new age tech companies, what has happened in the last couple of years, they have first of all undergone considerable correction from the highs we saw earlier. The second is that the business models are maturing. These companies have also realized that the times can be tough and you just can't continue burning for the rest of your life. The third aspect is that these new age tech companies, when they got listed, a lot of their valuations were related to what was happening in the US, particularly in case of the valuation of the tech stocks. If you look at the top 10 to 20 companies in the US tech space, they have seen considerable rally in the last 6 months, and some of the stocks have actually moved up by, say, anywhere between 50 to 80% from the bottom. So it is not only the fundamentals of the, you can say, the domestic listed tech companies which is showing in the stock prices, but also some uptick in the, you can say, the tech stock prices in the US, which is the largest market for such stocks. So in the long term, I think some of these stocks will stabilize, their business model will mature, and over the next 5 to 7 years, they can generate good amount of profitability and return for the shareholders. However, if you look at, say, the next couple of years, I think it is going to be a severe test case that how these companies adjust to the, you can say, ever-changing situation, how these companies become profitable and what sort of profitability they assume. Because let us take the case of any industry. In the long term, you can't continue valuing anything on basis of EV by sales, or you can say the market cap to, you can say, GMV sales or something of that sort. So I think in the long term, profitability is going to be the metrics, and I think that is where some of these companies have now started focusing, and there is a reasonable hope that some of these companies will turn profitable, maybe say over the next couple of years.
Okay, let's see when these companies do turn profitable. Thank you, Amnish, for joining us today with that quick take.